Hey traders, welcome to the US equity market preview for the month of September. So I thought I'd start today with just a full rundown of the SPX, the S&P, and just to break down where we're sitting in the bigger picture of the S&P before we get into the nitty-gritty of the individual equities. So as you can see, what we're looking at here is a monthly log chart of the S&P, and this 2000 equity bubble all the way through to the global financial crisis is actually one flat pattern correction. As you can see, it fits all the criteria and it is perfectly fitted for the larger degree. And I say that because what we see in the previous correction that we had heading into COVID, as you can see, that's a lower degree correction in comparison to that, which means we haven't had our larger correction that we should expect moving forward. So I'm just going to copy this correction just to show you what to expect from the S&P over the coming years whenever it decides that it's had enough and it is time to turn around. Zooming in on where we are now, you see that the correction that we had is only big enough to justify that it was a correction, an expanding triangle of this impulse to the upside. A, B, C, D, E, and now we're in the next leg higher. With that next leg having broken through minimum, median, and full targets, we can expect to head up to the extended target, given the current, what I believe to be blow-off conditions of the fifth wave that we're experiencing at the moment. So it seems to me we've still got some room to run on this one. I think upside targets for this are conservatively speaking around about that 4,000 level. So just to be clear, what we're trading is this expanding triangle is our corrective portion of the structure, and the preceding impulse would be this one. We are trading this up. And to measure our targets, we are using this impulse, using the Fibonacci extension, and we are finding that 3961 area as our extended target, given the current liquidity being provided by the Fed. It's that extended target that makes it so accessible as a high target, 4,000 being on the S&P. So now we're going to what we're experiencing at the moment in this recent wave, what we've experienced in this recent wave. Going down into, say, the 8-hour, 4-hour, we've only really had one crossover, as you can see, which is down in this region. So with that in mind, that is our corrective structure. So what are we looking at? What do we suspect? Okay, in its simplest form, perhaps it's a zigzag with a failed C wave. That means even in a failed stance, we have lots of room to run to the upside, with full targets being right near our 4,000 target level, which is interesting. The other alternative is that this has just been an A wave of the correction, or we could say that this was the A wave. There was a little bit of a corrective structure in the middle of the B wave, and we are now heading on to an extended wave of the B wave. As you can see, we are right on that extended wave level for this wave higher in comparison to this wave higher. So what that means is we may potentially see a pullback from this region to complete a large running flat that we've been in for the last few months, basically since June. And I think that is the case because if we look at where the crossovers occur on this 4-hour chart, it would indicate that this is your first impulse. And if that is the case, your first impulse higher, using our time rule, has just crossed our full target or full time requirement for a corrective structure. If we change this down We move our wave across. We see that this indicates that this there's still potential for a correction in the S&P down towards kind of 3,250 at the moment from where we're at. Zooming into the lower time frames, we can find that we really have had an extended wave higher, and we are trading this current structure of the C wave where we have an impulse higher, we have this little flat pattern in the middle, and then another wave higher, impulse, correction, impulse. And if we measure that, you'll see we are very flirting with the median and full targets at the moment, right at that level. So there's a lot of indications that what we're looking at is a potential area for a pullback. There's another option which I'm going to show you on the S&P, but for now, this is how I'm going to be treating this chart, just to see what is available to us. In terms of longs, there's nothing here for me. I would have to see at the very least another correction of this degree, but slightly bigger, in order to trade this to the long side. So what I'm really looking to do in terms of S&P is wait for this pullback, see if we do get this pullback, and if we get it, I will look for the long. Otherwise, I'm sitting on the sidelines for now. The other option is that if we go into the S&P, the running S&P chart, the picture indicates that from the highs, we had that same rally higher, some corrective structure. And this, if you look at the MACD, is the only wave that really makes any sense as a wave by itself. This wave and this wave seem like they don't match each other. So the other option I'm looking at for the S&P is that all of this was really just a running triangle for continuation to the upside. And if that is the case, it's going to run away from us. And like I said, unless we get a really clean entry that looks something like this, at the very least, a nice clean flat pattern structure, then there's no trade here for me. So all I'm really waiting to see is, are we going to get this pullback? If we do get that pullback, then I'm definitely on board to get long, because it's a really nice running flat after impulse. It's of the same degree, and it matches our upside target of 4,000 on the S&P as the next leg higher. As you can see, it would be around about the median target, 0.786, which is my favorite target. So it's just some things to look out for in the S&P. And the reason I'm very wary of getting long is looking at the FAANG stocks at the moment. If you look at Facebook, it's all got the same structure within it. We've had a large correction heading into COVID, and we've had a basically straight line up since early March without any crossovers in the MACD on the daily. No corrective price action on the daily. Amazon, same story, straight up. Microsoft, same story, straight up. Netflix, same story. Following a triangle, it's less of a move, but we haven't really had a correction. We're only starting to see a bit of a correction in Netflix. And Google, same story, straight line up. We have come a long way without any decent daily corrections on any of these charts since March. Think about that. No daily corrections since March, heading into September. So these are extremely overbought markets, very dangerous to trade long without the right entries. And if I am going to trade these long, I'm going to look for clean setups on the hourly that give me a good indication that getting long is the way to go. One of them is Amazon. If we look at the hourly, this is a really nice sized hourly correction if this starts to pull back towards that 3,000 level. Nice running flat, all the wave action that you're looking for, in which case I would then look to get long, and I would move my stop to break even ASAP. And I would be fairly quick to take profits on this, trading hourly structures. So if this were the case, I would probably only trade this up to let's say 3,600 minimum target I'd be very wary of this going all the way to 4,000, but those are the kind of areas I'd look to take profit given this market action and how far we've come without a correction. So in terms of longs, those are the kind of longs we're looking for, especially in the FAANG stocks. Microsoft, really we really have to look at what Microsoft's done. It's hard to say if we are in this corrective structure or it is following the same thing like everything else, where perhaps what we have as an A wave is actually a C wave or a zigzag correction or an expanding triangle, and the A wave would have to, or a running triangle, sorry, or a running flat, and our A wave is going to have to go all the way back there, like in Amazon, like in Facebook, where you see, it's more like Amazon, sorry, where you see the initial wave of the correction occurred back in 2018. ABC, this latest correction or corrective move lower during COVID was the C wave. In Microsoft, we're calling it the A wave, but potentially it is the C wave as well. And it just became a super extended wave, which is very rare, but it does occur. If we look at these Fibonacci numbers, you'll see it got down to the 2.414, which is the next level lower of Fibonacci numbers. So Microsoft, I know I've been saying we're looking for that pullback, but we need to be wary that it's not going to come. That being said, if it does start to come and it does start to look like there's some downside price action, then it's something you really want to look at because it is a really nice short. And as you can see, this final wave on the Microsoft, on this pattern has been quite a parabolic move. There's a little bit of curvature in it that gives it a sense of parabolic edge to it, which means potentially there's a room for a turnaround here. Regardless of what we're looking at here, there's nothing in here that says let's get long this short or this trade without a decent pullback or a decent corrective structure. It's all the same really. Netflix also giving us a decent correction, but I would need to see this play out for a little while longer. Looking at the MACD, we haven't had that crossover. I'd like to see a crossover in some of these pairs now. So in terms of FAANG stocks, the only one I'm really looking at the moment is Amazon, because it's got this little corrective structure on the lower time frames and shows like it's ready to go once more higher. The only danger is that potentially what we saw earlier on was a triangle, A, B, C, D, E, running triangle for continuation to the upside. So you have to be very wary of this, that it isn't just a lower degree correction here and turns around and continues to the upside, because it is a triangle. So all these trades in the FAANGs are very, very dangerous trades. And I can find much better trades looking at the less known shares on the S&P. So Abbott Labs was one of the trades we were looking at and worked out really well. Really clean structure, impulse up, long drawn out correction, impulse higher, with a nice little correction. And we said it was good to get in at around about $100, and pretty soon after that it was trading up at 114. We still see a little bit more upside in this, so if you can get a little correction in this, you might want to get in to the long. The only problem is we have a gap here, so that's also a little bit of a risky trade. That's kind of the theme for the market at the moment. It's really risky to get long given how exuberant shares are at the moment. Adobe, what we were looking for is a strong pullback, turned into contracting flat and just kicked one leg higher again. And again, it's that same correction, strong long impulse to follow. So even on the 4-hour, we only had barely one small little crossover to give us a little flat pattern, which is actually an hourly flat pattern, for a little bit more upside. So it's really dangerous getting long for most of these stocks, given that we've come such a long way. Excuse me. The one I do like in the pharmaceutical range is Alexion. So it is a very, very messy price action, but if you look at the structure within it, it actually looks pretty good. So you can see within here, this would be deemed our central pattern, our central B wave. You have an impulse up, impulse down, nice choppiness, looks like an expanding triangle, and a nice matching wave to boot that one. Then we have an impulse up, impulse up. There's no alternation, which is a bit of a concern, but it is a very nice clean pattern. And if we look at the numbers before it, it means we're looking at this as an impulse. And if we measure that impulse down to the lows, look at the correction, and we look at the secondary impulse, it goes down, touches on the minimums, and then takes off to the upside. Which means of all the shares to look for along, this would be one in terms of a decent looking structure. Going into the lower time frames, you see it's got that same kind of setup that Abbott Labs gave us last month, where we're looking at a fairly decent impulse to the upside. And it's either looking at this as the first wave, which I'm going to because of the MACD, or you're looking at this as the first wave, and all of that is just a correction. Either way, you're looking at this as potentially long, drawn out, running flat type structure for continuation to the upside. And then if you zoom into the hourly, as you see what's happened over the last few days, we've had a really nice impulse off those lows of the end of what we believe to be a C wave. So if you can look for nice long entries in terms of hourly price patterns to trade, this structure could give you a really nice move up towards 123, potentially as high as 138. So you would need to wait for a decent looking structure. As you can see, this was a fairly decent trade for an early trade, nice little lower degree running flat, especially in the lower time frames. And potentially what we're seeing here is the start of a little corrective structure, which you can look to get long. I'd like to see a bit more complexity in this B wave, a bit more complexity in this price structure. So maybe later in the week, Alexion Pharmaceutical could be a trade to the long side. Applied Materials, zooming out on Applied Materials, you see that same thing where it's basically come a really long way without much of a corrective structure. Taking a look at its weekly correction, some fairly impulsive waves. So right now we're treating this as a flat pattern. But there is potential that this turns into an A, B, C, D, E running triangle type structure if we get one more leg lower here down into the 50-buck region. So that's just something to keep in mind. For now, we're looking at this on the lower time frames. We're looking to trade this on the lower time frames. And zooming out, you find that it's basically the same thing, where we've had a fairly long move higher without any crossovers, even within the hourly, and only now are you getting a crossover. So there's not much in terms of trades unless we can start to see this pullback and potentially see this as a running triangle, A, B, C, D, E correction, and then this would be your impulse preceding it. So it kind of matches that flavor that we're looking for in the S&P, where we're looking for a brief pullback, and then the continuation to the upside should be a strong move to follow, with upside targets on Abbott towards $100, depending where we end, with Applied Materials, depending where we end the structure. So keep an eye on this. If we start to see that pullback that we're looking for, then definitely worth trading to the upside from this region. That'll obviously take a little while to play out, potentially not even this month, more than likely not this month, but just something to keep an eye on in the longer run. Advanced Micro Devices, zooming out on this one, you'll see same thing. Basically, we finished a nice little correction, nice wedge that we broke out of, and basically it's been a straight line up since then, with one small correction showing up on the weekly in this region. And if that's the case, we are very close, or gone way beyond, sorry, a complete structure on this one. So very long in the tooth on the longer time frames. If we're looking at the share itself, the previous structure on the daily, we're taking this as the impulse, And so far, we're still looking at this as a triangle, given the upside exuberance and given the little structure that we have at the moment, which means it's an extended wave to the upside. And we should see it push up towards $100, probably find some support or resistance at 100 Rand, or $100, sorry. So taking a look at the hourly, we have a fairly clean corrective structure forming. We have a nice clean A wave to the downside, nice long choppy B wave, and we should start to see this push down towards 75. So there is a long trade here, but keep in mind you need to be very cautious with your risk reward, with your risk management, given how far we've come without any decent corrections. So there's still the potential that this is a trade to the downside as well. So there's a lot of factors that say there is room for downside on this stock. So getting long is getting long at a very wary area. So just be careful of that. Boeing, BA, I still remain bearish on the airlines. It's been a bit of a choppy week last week, or this last month actually has been quite a choppy section, but I still suspect that we're going to see some downside. As you know, we're looking at this as a larger degree structure, and it's been messy given what we've been looking at in terms of structure. So we need this wave down. In terms of that, we've had a really clean structure where we need this wave down to complete it. And if you look at alternation, we have this wave lower, we have the B wave, and you would want this to be a bit more choppier than the A wave. So we're getting that choppiness that we're looking for, and it's been challenging to trade. Now we're just waiting for that downside to really kick in. Looking at the MACD, there's really two ways this could play out. Either it is playing out as this expanding flat that we've been looking for, or you start to see this really get choppy and you see that that is actually your A wave, and potentially all of this develops into a flat, and all of this is actually the first impulse of the move lower. So that's something to keep an eye on, but I don't see a scenario where we head higher from here given the wider structure. So we are either going to break lower following this flag, it's quite a nice looking flag to trade to the downside, or we're just going to continue to chop lower with a little bit of complex price action down towards these lows at 166, and then potentially we could see one last push higher up to 180 before we see that continuation to the downside. So those are two scenarios to look out for, but at the same time, I don't see a scenario where we go long here. The only way we end up having to, or end up seeing this market go higher, is if we haven't seen the end of this wave. That is really the only view in my mind that we can't, that can play out where we go higher from here, and that means breaking the highs at 190 before turning down to the downside. And I say that because the alternation on these waves is there, but it's very slight. So even that being said, that, as you can see, is fairly decent alternation when we come into the hourly. So to me, that's a complete structure, and we are heading lower. We're just taking a choppy road down, given how straightforward this wave was. That choppiness can be expected. So keep an eye out on this one. I would take this flag. I like the risk reward of this flag. Even if it does just break here and continue to chop lower, it'll give you more than enough time to see that a C wave is coming, and you would want to get out at a decent level, 166, or at least, at the very least, break even. Alibaba's interesting looking share, given that we've had this really nice long impulse up. If you see by the MACD, there's a strong pullback. We go into a very clean B wave structure, impulse correction, impulse up, which means we're waiting for the C wave down. There's nothing to say we've seen anything along the lines of the C wave. So Alibaba short trade is a really good looking trade once we can see a little bit of dying out in momentum. As you can see, we just completed a little bit of a correction and one last push higher. So it's all about seeing where are we going to see a turnaround in this. The higher degree structures are really pointing towards more downside once we see the turn. So it's all about being patient and looking for that turn, looking for a change in momentum. And as you can see, we've already got a fairly good looking MACD divergence on the 4-hour. If you go into the hourly, I'm sure we'll see this in much cleaner light. So some decent looking MACD divergence on a couple of the time frames, and a higher time frame that suggests we want to see a big pullback from about 291, where it is now pre-market, down to about 204. Obviously, we could still see some more upside in this. Excuse me. But really, you want to take a note of this wider degree of the higher degree structure, that there is a little bit of a downside to come moving forward potentially. Again, another one that matches that S&P pullback moving forward. Beyond Meat, another share that we think is a nice looking short trade in terms of this little corrective structure. So there's actually a nice trade to the downside and then to the upside. Just measuring this as the impulse, you'll see that what we're looking at is a correction or corrective structure in this region that matches the right size for an impulse to follow to be quite a nice trade to the upside. So heading in towards the end of the month, I suspect getting long Beyond Meat will be a really nice trade with a really nice price target. If we look at this impulse, we'll see our price targets around about 176, full target 202. And then you'll see our downside target for our short trade at the moment is about $100. So that's a good doubling in the stock moving forward, which is interesting. Moving into the lower time frames, we're actually bearish on the lower time frames. So longer time frames, we are bullish, waiting for that right level to get long. But on the lower time frames, we're waiting for this corrective structure to play out, where you see we have this impulse down, we have a fairly decent ABC, and we're waiting for this to drop lower. But what I looked at over the weekend is that this should actually be shifted around a little bit in terms of our structure. So I want to actually relook at this as this being the corrective structure. If you look at the MACD, we have our MACD crossover here, not here. So I think all of this is going to be an impulse. We are now just completing what looks like a running flat for more downside. So expect this week for Beyond Meat to start heading lower quite quickly. And again, potentially in line with what the S&P is doing at the moment, waiting for that wave lower from very overbought territory. So we've matched everything we need to in this little tiny structure on the hourlies. We touched on our 0.786 price target, and we've had quite a strong pullback from those highs. As you can see, on Friday, we kicked back minus 6% from the highs. So keep an eye on this one to give you a little bit of a corrective move here. As you can see, pre-market is quite a lot higher. So we might see this as the first wave of a correction and then a continued chop lower with a good potential for entry following this structure. Obviously, there's a chance that this goes and breaks the highs once more to complete the full target of this pattern. But regardless of that, I just see a fairly decent structure that indicates to me a fairly good strong move to the downside to come in the early parts of this week. Cisco Systems, zooming out, you'll see what we're trading is the completion of a zigzag correction, best seen on the daily. So we're looking at a impulse down, a choppy corrective price action, and an impulse down, nice zigzag wave, and then an impulse from those lows up towards 48, so 32 to 48. We're then getting a nice corrective structure for continuation to the upside. We had a massive gap lower, and it looks like it's starting to find a base at this 42 region. And taking a look at the length of time this correction took, you'll see that we had just surpassed the minimum time required for a correction of this degree, which means our upside target for this trade, if we can start to see some upside momentum, is minimum 51 and full target 57. So if we can start to see a little bit of upside momentum in the stock, it's definitely a trade you want to start to look at as a long candidate from this region. On the really lower time frames, there's a really small corrective structure. 5-minute chart, sorry, small corrective structure, where you have this impulse off the lows and you've gone into a little bit of a correction. So potential for this to start moving from this region with a really nice upside, or really nice looking upside. Given the bearishness that a lot of the other market is showing, this would probably have to be news driven in some way, or we might not be at those lows. We might just be hovering around this region for a while. Obviously, this is a big gap to start to see a lot of upside momentum. So potentially we're just going to be hovering around here for a little while before we take off. So be patient with this one until you see a really clean entry on, say, the hourly. I wouldn't really look at an entry on this unless you really want to keep your stop loss nice and tight. Delta Airlines, very similar to Boeing. I'm not going to get into the details of it, but if you look at the structure, it just all points towards further downside, where we have an impulse to the downside, a nice A wave, long choppy move lower with a nice little pattern in the middle and a push higher. We suspected that this was the end of the trade to the upside, but it got choppy, and it makes sense that it got choppy because the initial wave is basically just a straight line up. There wasn't enough alternation in this wave to match that as a C wave. So we got the choppiness. Now we're looking for a turn to the downside in Delta. So keep an eye on that. We've got some MACD divergence on the cards already and a little bit of dying in momentum. So I like Delta short this week, and I like this to go and test the lows at 19 once again, just like all the other airlines. So really nice risk reward trade available to you if we start to see some downside action. Just don't see a scenario where we head higher from here unless all of this is a triangle correction, which doesn't make sense at all. So I'm fairly confident that we're going to see downside in Delta. So if you start to see some downside momentum, you start to see some red candles, it's a great time to get short. DuPont's not going to go into details of this one. You can look at the past videos, but it's all playing out exactly as we've said. We're looking for this move lower. We're getting some choppiness down towards that 48 region. Nice little flag potential trade to the downside. But really what we're looking at is to load up on the stock at this 47 region to hold for a multi-year hold, probably, given the larger degree structure that we're looking at. As you can see, really clean impulse correction, impulse running flat structure for a chance to retest 110 from this from that 48 region. So doubling of the stock, potentially more over the coming months and years. Disney, that same structure, impulse correction, impulse, and basically a straight line up from the lows. But luckily with Disney is that we haven't seen a break of the highs. We haven't seen that overly pushy momentum. So there's a chance for a decent looking long here if we can start to see a pullback in the stock. So what I'm looking at is this as your first impulse, and potentially all of this is a corrective structure, a nice running flat. If we can start to see that same downside momentum that we're looking at or we're looking for in the S&P, this would be one of the stocks I would really look to get long as an individual stock following the S&P. It's a nice choppy initial impulsive wave that hasn't really taken off really well. So you can expect this to be quite a much more impulsive move off of this 114, 115 region. And your upside targets would be in the ballpark of around about 150 all the way up to potentially 170, 165, somewhere there. So keep an eye on that to play out later in the month for a nice long trade in Disney. EA, we're still having a close look at this structure and a potential pullback from this region. And as you can see, it's another one that's just really long in the tooth. Given the structures that we've had an impulse up, we had a little structure, not even of the daily. We still haven't seen a daily crossover or daily corrective price action. if we're trading or looking at this structure, you see we are right up at that full target. The only thing we haven't seen is some downside momentum following this high. We had a small little impulse and we've gone into some choppy price action, which makes me feel like this impulse is actually an A wave correction for a little bit more upside. As you can see, the B wave is struggling to get up there though, up to that high at 147. So potentially what we're looking at is a regular flat, potentially one last move lower, another push higher, and a double top at around about this 147 region on dying momentum. And that could be a really good indication that we've seen a high here. Looking at the centerpiece of the structure, it's hard to say what we're looking at, but I would imagine we can look at this as our corrective structure. This is your first impulse, correction, impulse up, and that's the end of your B wave. We're now seeing the C wave to the downside, which kind of again matches that S&P structure or S&P price action that seems to be the case that we're looking at the moment. So let's see how this plays out, but definitely zooming back out to the weekly, you see exactly why we're looking at this as a potential short. Really clean price action. And if you measure this A of B wave, you'll see that we're touching on that 1.618 extended wave region. So just a really clean price action and really good indication we are heading lower. GDX, we remain in correction. We still want to see this running flat correction play out before we see continuation to the upside. I'd like to see another little crossover here to match this one on the daily. We already see it on the 4-hour. We've had a nice crossover. We've had a secondary crossover. I think we're going to get a little bit of consolidation here and then one last push potentially down to break our highs at 37.63, and that's going to be a great place to get long GDX. The problem with this one is I look at gold, and gold looks to me like it's going to be in consolidation for quite a long time. So just be wary on this and keep good risk reward or good risk management, and hopefully this plays out really nicely. There's obviously potential that it becomes an expanding, so keep that in mind as well. Just be cautious, wait for the turn before getting long. Goldman Sachs, we spoke about this on last week's webinars. It's a really good looking price structure. We just completed a really long drawn out corrective price structure. A wave back in 08, long drawn correction all the way through to the 2018 pullback, and a completion of this corrective structure down in March at the 125 region. Rallying off the lows, we see a fairly decent impulse that's quite choppy, which means what's to come is potentially quite an explosive move higher. And if you take a look at the length of the correction, we've just crossed the minimum time. It's a nice triangle shape. You look at the price action within the triangle, it's very clean. It just looks to me like Goldman Sachs is looking to break higher. We had quite a strong push off the E wave, went into correction, had another one, and we've had quite a decent pullback from there. So I would say any break of this 213 high is a great place to get long and start to accumulate the stock, because the structure really looks like it wants to push higher up towards 254. More than likely wants to get up to 287 full target, given the wave that came before it. So Goldman Sachs, one of my favorite trades on at the moment, or that I'm looking at the moment. Moving on to Halliburton, we remain in this little consolidation for continuation to the upside. Zooming out, you see we've had a really large expanding flat pattern, potentially an expanding triangle if you look at it, A, B, C, D, E. And now we want to break higher. It just looks to me like Halliburton and oil wants to break higher, following a little bit of a consolidation. When we zoom back down, you'll see that what we've had very similar to Goldman Sachs, just different correction, is a really nice impulse off the lows with a little bit of corrective structure in the middle. We've gone into a nice long drawn out correction. If you take a look at the timeliness of this correction, you'll see we just crossed the 1-to-1 line and we still haven't had our C wave. I think we're going to see a pullback down to this 11, 12, between 12 and 10 region, and that's going to be a great indication to get long, to hold that stock for price structure wise up towards 20 to 25, but potentially for this to continue as high as say 40 to 50, potentially 60, given the surrounding higher degree price structure. So that's definitely one you want to keep an eye on over the course of the next few weeks, potentially this week, where we see a nice fall down into this region. You definitely want to get long Halliburton. Biotech, higher time frame, still really clean. We're still looking for a nice push lower down towards this 87.50 region. As you can see, it's a fairly clean structure. It's not my favorite, but it does have all the right characteristics of a good corrective structure. Impulse down, a B wave that has an impulse before it, then goes into a nice flat pattern, and then a strong impulse up. We've had a fairly strong looking turn off the highs on the lower time frames. We've then gone into this little correction. So what I suspect what we're looking at is a little bit of a running triangle correction for more downside. I don't see this heading higher. I don't see a scope where this pattern decides it wants to go higher, given the current structure. We've had this impulse, we've gone into a little bit of a correction, and we need to see another strong impulse down. Potentially what we're looking at is another way is that this is the correction, and now we are just in a choppier version of this wave. So it's been really frustrating. It keeps just breaking the lows and then popping higher, breaks the lows, pops higher. But one of these days, I think it's going to break the lows and just continue lower. So just keep your entry orders there, keep trading this to the downside. I don't see indication of any upside potential in this one. But there's nothing to say it doesn't pop much higher. Potentially this still needs to have its C wave, which means we could see this pop up towards 137, and all of that becomes a running flat of this impulse. So we'll have to see how it plays out over the next few weeks, but I still see more downside in this. So looking for those short entries in biotech. IBM, pretty much the same structure of nice long drawn out correction. It's a bit of a zigzag correction. We saw the lows and we saw a strong rally off the lows. We then went into a little bit of a corrective structure. So I'm looking at this as the impulse, ABC correction, and I think we're just seeing alternation of a choppy corrective wave, alternation of this wave. So it's quite an impulsive wave, and we're just seeing a choppier version of this wave up towards our full target at around about 150. If we zoom in, you'll see what we're getting is another very triangular looking trade or triangular looking correction. And if that is the case, it looks to me like we're ready to pop higher very soon. You'll see this is a nice A, B, C, D, E corrective structure. It looks a bit flaggy, so maybe one last move down to break these lows at 124, and then a push higher from there. So even on the lower structure, it looks pretty good to me because we have an upside target of around about 136 to 140. But if we zoom out to the higher degree structures, you'll see upside targets are potentially 156, 157, or 150. So that 150 region looks to be where we want to head on this once this is played out. You could also look at all of this as a long drawn out triangle that's ready to hit higher as well. So it's almost a triangle within a triangle, what Neely calls a non-limited triangle, which means this could really pop higher from here once it starts to get moving. So I really like IBM to the upside. It obviously doesn't match our S&P thesis, but there is also scope that what we're looking at is a bit more of a flat pattern than a triangle. So just keep an eye on this. Potentially it's just a flat pattern that's going to slowly develop, and that's only been your A wave. Now we're in the B wave, then we get a C wave, and only then we pop higher, and then all of that was the impulse. We'll have to keep an eye on this, but either way, upside seems to be the way to go. So we're looking for those long entries. Lockheed Martin, great looking trade to the upside again, very similar to IBM. We completed this long drawn out correction, all the price action we were looking for, strong impulse off the lows, which would be this one. Then we went into a fairly decent expanding flat correction, small impulse up, and we've gone into another corrective structure, which looks to me like a little bit of a running triangle. So impulse up, A, B, C, D, E. We're looking for that last wave down. We spoke about this on Thursday, and now we're ready to pop higher. So at a minimum, trading the lowest degree structure, you see we have upside targets of around about 424 all the way up to 446. Zooming out a little bit to the higher degree structure, let's go to the 8 hour, and you'll see something fairly similar in terms of targets. Impulse up, corrective price action, and price targets of minimum 423, median target 445. So it looks like Lockheed Martin is ready to go up to this 446, 447, this region here to make new highs. So I really like Lockheed Martin for a long trade, especially this week, given this running triangle corrective structure that looks to be playing out. MasterCard is something we're looking at on the higher degree structure on the daily. As you can see, just a really nice looking corrective structure. Quite impulsive, but very much in terms of what looks like a B wave, a C of B wave. We have a nice impulse up, going to a very clean running flat, and we are now pushing up towards the full target, or pushing on that full target of the C of B wave, which means what we're looking to have next is a bit of a choppy move, but quite a big move nonetheless in MasterCard, all the way down to 227. So keep an eye on this to turn around. Look for some change in momentum. As you can see, it's been a bit of a blow-off top, very impulsive price action, very much parabolic in nature, which means we could very easily start to see a breakdown in this price structure, a loss of momentum, and that's a good time to start looking for shorts in MasterCard, given the higher degree structure that we're looking at. Mattel, again, very similar to DuPont. We speak about this pretty much every week. Nice, really clean corrective price structure on the highest time frames, on the weeklies, even on the monthlies. You'll see this is a very clean structure. We've seen a nice turn off the lows. Not very impulsive, but not too bad at all. And why I like it is it's given us a fairly decent corrective structure on the hourly. So you have this impulse up, impulse down, nice B wave structure, and a long drawn out C wave to the downside. Looks like we're getting one last little correction for one more pop lower, and that's where you want to accumulate the stock for another multi-month, multi-year hold, given the higher structure has a good potential to go test the highs at around about 48 once again from 11. So it's a nice 5-bagger, 4 to 5 bagger over the next few years. So definitely one to look out for. 3M, looking at that same zigzag type correction where we see a very deep corrective phase, impulse down, and somewhere in there is a zigzag. I'll need to relook at this, but basically it's like impulse down, running flat, impulse down with alternation, and then a nice rally off the lows. So it looks to me like this is your first push higher. We've gone into a little bit of a corrective structure here, maybe a complex one, maybe all of this is just the impulse and this is your correction. Taking a look at the time, if that is the case, we have crossed it. So What I'm looking to get here, what would be great, is one last push lower to give us a bit of a correction in there. It's also possible that it's a more complex correction where we see this is a push lower, so that would come next, and the waves preceding it, that would be your A wave, and then you see another one up here. So you'll see a little push higher to finish this little B wave. All of this is part of your B wave. Then you see a pullback, and all of this becomes sort of a complex running flat for more upside. So nothing really to look at right now, but over the course of the month, you want to periodically go back and check this. And if we start to see a structure that looks something like this, then you definitely want to get long and look for a continuation trade to the upside. At the very least, you'll get a half decent move up towards 177, full target 196. Potentially, this starts to get a bit more legs and moves up towards the 200s, maybe even new highs at 250, 260. Also, I like this as part of the cycle out of tech. So it's these kind of undervalued stocks, relatively speaking, in terms of the broader market. Moderna, we've been looking at this for a while now, looking for this to get short, not going into the long drawn out version of this analysis. All we're looking for is this pop higher up towards 77, which will be a great opportunity to get short down towards 45 and potentially lower, given the lack of fundamentals that this company has. Morgan Stanley, very similar to Goldman Sachs, where we've had a nice impulse off the lows and a nice looking running flat, or running triangle, excuse me, to the upside. Zooming out, you see it's upon completion of a decent looking correction, regular flat A wave, nice structure in the B wave, strong move down C wave, and a strong impulse off the lows. We now are in the middle of, or towards the end of, a corrective structure. We've just crossed over the minimum target line of terms of length of the correction, and we really should start to see this take off to the upside. Really nice targets given the preceding impulse as well. We could see this head up towards 65, potentially as high as 75. So from where we're standing right now, potentially a 40% climb in Morgan Stanley, kind of following Goldman Sachs, potentially on trading revenue, given the nature of the bank. So I really like this trade as well. Morgan Stanley and Goldman Sachs are really good looking trades. Northrop Grumman, we're still looking at this as a potential short trade, just looking at the area. So interest for me is anytime we break these highs at 358, we're looking for this turn lower to complete the structure. If we zoom out, you'll see we have an impulse up. We've gone into a corrective structure. It's not my favorite, given the nature of the correction in terms of the preceding impulse. So we'll have to see how it plays out. All of this could just be a zigzag correction for the end of a C wave, and you see that all of this actually becomes some form of correction in there. So if this how it comes out, but given the structure on the lower time frames, I like a short trade down towards this 260 region once we can see a loss of momentum. Looking at the MACD on the lowest time frame, you see we're already getting some MACD divergence, which is interesting, a little dying off of a momentum up towards those highs. So keep an eye on this one for a turnaround. Riot's an interesting one. We have to zoom all the way out to really see what we're looking at here. We have obviously the Bitcoin bubble in 2017 and a long push lower, then a pop higher and a long drawn out wave and a pop higher, which to me indicates an ABC correction for continuation to the downside. As you see, as we move things along, this little crossover is your A wave, a nice long drawn out B wave, and another push higher C wave. There's not much alternation, which is a bit of a concern, but it does look like it wants to head lower at some stage. Potentially this gets a bit choppier and pushes once more higher. up towards the highs at $6. But if you can see some downside momentum and you see a downside entry potential, then there's a really good short trade in this for you, potentially heading back down into cents, kind of 50 cents, maybe lower. So it's a really nice looking trade if you can find the entry available to you. Roku, I remain convinced that we need to see some downside in Roku because of the current structure. If you zoom out, you'll see it's really clean before this correction. We have a really nice impulse up, nice little flat pattern, really clean impulse up, and we go into a long drawn out correction. I just don't see a structure here that doesn't indicate this to be an expanding triangle. As you can see, we've just broken these highs of the beginning of the correction, which is a very interesting level. And I think what we need to do is wait and see if we get this E wave. There's a potential short if you want to take a risky trade. Obviously, E waves are risky because we don't know how deep they go. But a good indication of where we might be headed is this little gap here, 97. So from 172 all the way down to 97 is a really nice looking trade, especially with Netflix moving sideways and the S&P looking overbought. So keep an eye on this for a move to the downside. If we just go back into the lower time frames, you'll see we're getting some MACD here, some MACD divergence. If you're looking at that as the highs, we've made new highs on lower momentum, which is interesting. We saw a little bit of a corrective structure here, which we thought may have been the turning point, but it just pushed higher once more. And a good impulse up is oftentimes the indication of the end of a structure with potential downside to come. So take a look at this for potential turnaround. Interesting to see a little bit of a flag developing here. It is very low time frame. I'm not a huge fan of trading down all the way down there, but it kind of matches the structure and it shows you really decent potential for a really good short trade. So keep an eye on that. Save, not going to get into too much detail, pretty much exactly the same as the other airlines. Possibility we're going to break the highs of what we thought was the end of our wave to make a new wave to the upside, or potential that we're just heading lower from here following an expanding flat. It's one of two things, but really at the end of the day, we're looking to get short and hold this all the way down to around about $8 back to the lows of the stock. So really nice looking trade to the short side if you can find the entry. It's been elusive. It is a choppy wave given that this first wave was really quick. So keep an eye on that if you can find the entry. I would really like this to pop high and break these highs once more, just to really solidify the fact that we're heading lower. I know it doesn't really sound like it makes sense, but I'd like to see a bit of alternation in these waves of the B wave structure. Because if we are trading this as the A wave, you will see that this as a C wave doesn't have much alternation in it. It's also pretty much a straight line up. It takes a little bit longer, but there's not much alternation. If we start to see a bit more choppiness in this, then there's a really good chance we're going to see some downside. If you want to trade this from a classical point of view, we're starting to see a bit of a double top here on dying momentum, which is a good indication that we're going to see a double top and a move to the downside. Starbucks, zooming out, I noticed an opportunity. You see, same thing. We have what looks like a zigzag, very clean zigzag correction. Not much to it, but following that is a really strong impulse off the lows. We then had a crossover on the daily. So one of the rare stocks on the S&P that has a daily crossover, which means we're looking at this as a potential corrective structure, where we see this as an A wave, and what potentially is going to occur this month, heading into the middle to towards the middle of the month, maybe earlier, is a nice little C wave to the downside. And if we see that C wave kind of matching the S&P structure that we've been looking at, good chance we can see a push higher following the S&P higher with upside targets of around about $100 on Starbucks. So you can get in at around about 72, 73 and push all the way up to 100. So a nice 25% increase in Starbucks if we see this move lower. Going into the lower time frames, you'll see there's quite a decent corrective structure within this B wave, where you see a lot of choppiness in the middle here. Maybe a complex running flat of some kind. I'm not going to get into the details of it. And then a nice strong C wave impulse out. So impulse, correction, impulse for your B wave. You should see quite a strong move lower as a C wave, and then from there a nice long. So potential short as well, 85 back down to 73, pretty good. If you can find the right correction, the right entry. You're seeing a bit of MACD divergence already on the, or internal divergence. If we go into the 5 hour or 5 minutes, you'll see the MACD divergence that's occurring already. Momentum's dying off. Maybe one last push higher in this, given this little 5-minute structure. But I do like it to the downside, and a nice long trade following that. So I like it down and I like it up. Tyson Foods, we've been speculating about this for a while, given the structure. Zooming out a little bit onto the 8 hour, you'll see we had an impulse A, B, C, D, E expanding. And then from those lows, we had quite a strong impulse. And then went into a long drawn out correction. We then were looking at this for potential long entry following this little correction at around about the 60 region on the lower time frames. So we had a little impulse up, long drawn out correction, impulse up, and then went into another corrective price structure. So we're speculating that what we're looking at is another A, B, C, D, E expanding corrective structure. We did see a nice break of this flag pattern, little break and retest, and potential for this to start pushing higher in this session up towards 68. So keep an eye on this, and ideally you would want to see this entire expanding triangle play out, because then all of this is your impulse up, which means your upside targets are going to be around about 73.50. It kind of matches the higher degree structure. So nice looking trade from 66 up to 73 on a very stable stock. Anything outside of tech at the moment is really attractive in terms of relative value. Twitter continues to push higher. We were looking for this to push up towards that 45 region and then pull back to give us a nice running flat. So also, once again, kind of matching that S&P pullback that we're looking for. Might happen a little bit sooner because we have already reached the upside targets or minimum targets of this upside wave at 41. So we could start to see this pullback from here already. But generally speaking, we're looking for this to get up to 45, pull back towards 35, and then take off from there. And the short trade, not huge for me, but it is there. But I really do like the long trade from 36 if this does play out like we think it is going to. And finally, Verizon, we still like this as a long trade. Zooming all the way out to the weeklies, you see we just completed, very similar to all the other stocks, impulse correction structure. The 2013 to 2015 would be the A wave, long drawn up move higher, and this final like December COVID situation was the C wave of this correction. And we then had a strong impulse off the lows. So big impulse down, impulse up, and now we've gone into a corrective structure that looks a lot like it wants to become an expanding triangle. So if we break out of this little wedge to the downside, kind of like the S&P, once again, down towards 56, then we can really start to look for a nice long in Verizon up towards 64 to go break those highs. So as you can see, a lot of the equities I'm looking at, apart from the tech, which is just crazy overbought, is indicating a pullback and then a continuation, which matches what I'm expecting in the S&P. So it's really interesting to see, and definitely worth keeping a close eye on heading into September to see how things are going to play out in September. I can very easily see a pullback in early September, a lot of interest around it, and heading into November, heading in towards the elections, the powers that be would want to see a rising market, and that rising market would match pretty much a majority of the charts that I've been looking at in the US equity market. So keep a close eye on that for that dynamic to play out, and some really good trades to the short side, but really to the long side, buying the dip once that short occurs. Cool guys, have a great month. See you in the group, see you in the academy, and we will chat soon.